Good morning everyone and welcome back. We're taking a look at IREN stock heading into the pre-market, and after a wild week, it's time to ask the big question. Is this name primed for a breakout today, or are we staring down the risk of another pullback? Let's get right into it. IREN closed Friday at $33.96, up just over $1 on the day, which was a gain of about 3.38%. That close capped off a week where the stock saw both sides of the volatility coin. Earlier in the week it pushed into the mid-30s on heavy volume, then it dipped back on Thursday with a 2.3% slide to 32.85, and then it rebounded into Friday's close. So in the space of 5 trading days, we've seen the stock surge, retreat, and then re-establish some footing. That sets up a really interesting pre-market dynamic because investors are trying to figure out if the momentum continues into this week, or if the chart wants to cool off a little bit more. Now, before we get into the positioning and the technicals, let's remind ourselves what's driving this stock fundamentally, because that's what underpins everything. The company just reported record quarterly revenue of $187 million, which was a year-over-year increase of 228%. They swung from a 27-cent per share loss last year to a 70-cent profit this quarter. That is a huge turnaround, and it's one of the reasons why analysts have been upgrading the stock and why it has started showing up on high-growth stock screens. On the Bitcoin mining side of the business, capacity has now reached around 50 exahash per second, which puts IREN right at the top tier of global miners. Mining revenue is up more than 200% year-over-year, and that cash flow provides a base for the company to keep expanding. But where this story gets really interesting is the AI cloud segment. They've now deployed roughly 11,000 Nvidia GPUs with another 9,000 scheduled to come online. On top of that, they've been granted preferred partner status with Nvidia. That's huge because it addresses the bottleneck that so many AI infrastructure players face, securing reliable access to GPUs. It also connects IREN to Nvidia's broader partner ecosystem, which can help accelerate customer acquisition. The AI cloud revenue is still modest in absolute terms, about $2.4 million, but the margins are extraordinary at roughly 98% on the hardware side. Management has laid out a target of ramping to $200 to $250 million in annualized AI revenue by the end of the year. If they can execute on even a large fraction of that, it shifts the way the market values this business. No longer just a cyclical Bitcoin miner, but a renewable-powered AI infrastructure company, which commands a higher multiple. That shift in perception is exactly what Eric Jackson has been hammering on in his thesis. He's argued that if you value the mining, the AI cloud, and the power assets separately, you get to a number that's much higher than where the stock trades today. His more aggressive case has IREN at $100 in the next 18 months, and even up toward $300 in the longer run. Whether you agree with those exact figures or not, the point is clear: the company is in the middle of being re-rated by the market. So, what does that mean heading into pre-market? Well, there are a few moving pieces. Let's start with positioning. Short interest has been trending down, but it's still meaningful, just under 12% afloat, with a days-to-cover ratio around 1.1. That means there's still fuel for squeezes when the stock trades well. On top of that, we've seen elevated call option activity. In early August there was a day flagged as unusually high options activity, with more than 160,000 calls trading, which was more than 60% above normal levels. That call-heavy skew hasn't gone away. What that tells us is that when IREN ticks higher, you can get amplified moves as dealers hedge and as short-term traders jump on momentum. From a technical standpoint, Friday's close was constructive. The stock bounced off its Thursday low around $32 and held above support in the low 30s. The range to watch now is 32 on the downside and 35 on the upside. If IREN can clear 35 with volume, you open the door to a breakout run, possibly toward the upper 30s in the near term. If, on the other hand, it stalls below that level and loses the low 30 support, you could see a pullback toward 30 or even high 20s as it consolidates. Now, in the pre-market, the big thing to monitor is whether volume builds early. If you see elevated pre-market volume with bids stacked near 34, that suggests institutions are adding to positions and it makes a breakout attempt more likely. If volume is thin and there's weakness in related sectors, say Bitcoin miners, AI infrastructure names, or Nvidia itself, that could weigh on IREN and trigger some profit-taking. Speaking of related sectors, don't forget the macro backdrop. Bitcoin prices and mining economics still matter. If Bitcoin trades higher in Asia or Europe before the US Open, that often bleeds into sentiment for miners. On the AI side, anything Nvidia-related, whether it's news on supply chains, GPU shipments, or large cloud contract wins, tends to influence IREN. Remember, the stock is trading like an AI proxy now as much as a crypto proxy. So here's how I'd frame it for today. On the bullish side, you have fundamentals that remain strong, with record revenue, profitability, and a credible AI cloud growth plan. You have positioning that's friendly, with shorts still out there but trimming, and a call-heavy options market that can fuel upside. You have technicals that show strong institutional accumulation, with IBD composite ratings in the mid-90s, relative strength at 99, and an A grade on accumulation and distribution. All of that points toward a stock that's in demand. On the caution side, you have a chart that's run hard in a short amount of time. The stock was under $6 not long ago, and now it's flirting with 35. That's a six-fold move in a matter of months. You have the risk of overbought technicals, RSI and momentum indicators flashing hot. And you have the risk that the AI cloud revenue, while promising, is still small today. Expectations may be getting ahead of reality in the short term. Those are the factors that could make a pullback more likely, even if the long-term thesis remains intact. So the way I see it, today's pre-market setup boils down to this. If the stock can hold above 32 and build volume toward 35, it has a real shot at a breakout. If it struggles to find buyers and slips back under 32, expect consolidation. In either case, the long-term story hasn't changed. The Nvidia partnership, the GPU expansion, the mining cash flow, the nearly 3 gigawatts of renewable power, all of that is still in play. The difference is just whether the market wants to push right now or take a breather. Let me also flag leadership because it matters in pre-market sentiment. The promotion of Anthony Lewis to Chief Financial Officer was a strategic move. His background at Macquarie in energy and infrastructure finance means the company has someone who knows how to scale big, capital-intensive projects. That's critical when you're deploying tens of thousands of GPUs and building massive data centers. Investors know that, and it adds confidence. It's one of those under-the-radar positives that doesn't always show up in headlines but helps steady the stock. So, what am I watching as we head into today's open? First, the tape itself, volume and price action between 32 and 35. Second, any pre-market headlines around Nvidia, AI infrastructure peers, or Bitcoin. Third, options flow at the 35 and 40 strike levels. If you see a surge in near-dated call buying there, it could be a tell that momentum traders are pressing for a breakout. Fourth, Bitcoin price moves, because mining cash flow still matters and can influence sentiment even if the AI story dominates the headlines. To wrap it up, here's the key takeaway. IREN is entering pre-market today in a strong but delicate position. It's had a big run, it's pulled back once already, and it just bounced into the weekend. Fundamentals are solid, the long-term growth story is compelling, and positioning is favorable. But expectations are high, the stock is technically stretched, and the next leg will depend on whether buyers are willing to chase above 35. So is this a breakout or a pullback setup? The answer is both. If the bulls show up with volume, you could see 35 give way and momentum take over. If they hesitate, you might see more consolidation in the low 30s. Either way, this is a name that remains firmly on my radar and one I'll be following closely as the session unfolds.